Real estate. Hopefully you guys are hearing me and I'm coming through loud and clear. Now, today I wanted to do a little conversation on where we are inside the property clock. I think it's an interesting place where the real estate market is at the moment. So I did want to do a little bit of a conversation around where we're at. Now, traditionally, we have a sort of property clock, which is, a visual experience. We've got sort of hot at the top, or peak rather. At the bottom, we've got actually. Let me just bring up my little camera. Hey everyone, welcome aboard. We're going to talk about the property clock. I might start again. Now, traditionally, every month the market sort of flows along and it goes through sort of peaks, it goes through troughs, it goes all different directions. And that's why we have the Reserve Bank of Australia. Every month they meet and things go in different directions. So really over even a 6 or a 3 month period, you can go from sort of being at the bottom to being all the way at the top. Generally, over the long term, though, sort of 15 odd years plus, real estate goes up more than it goes down. And so that is something that we always need to have in the back of our mind. So really today, I wanted to discuss where I think the property market is right now. And if I was to draw more of an analog clock, at 12, we have the peak. At 6, we have the bottom. 2, we have a slide in value. At 4, we have a stagnation or trough. Let's call it a trough. At 8, we have the rise or recovery. And 10, we have a hot market. So it's probably fair to say between sort of 2020, 2021, we're probably sitting up here when it comes to the level of performance of the marketplace. It's been a really, really, really hot market. Now, generally, after a hot market comes a little bit of a downturn in the context that the market begins to slide. However, what we are seeing off the back of low rates and a very high appetite for real estate, this will not be the case. So we are going into a market known as boom recovery. We're actually almost gone all the way around the clock once again. And now we're going to go into a period of basically more normalized growth, 5% per annum over a consistent period of time. Rather than a 20% growth marketplace, we are now going into what is known as boom recovery. Now, why markets tend to boom is quite often years will go by without any growth at all. And we call that mean reversion. Basically, what happens is we get 4 or 5 years worth of growth in 1 year. It basically almost, it's the genie in the bottle and it needs to get out. So is the next phase for the real estate market a sad place? Well, actually not. It is going to continue to do quite well moving forward. However, it is going to be more charitable and consistent and sustainable growth moving ahead. Certainly, we are not seeing in most of the markets where there has been growth performance any reason for the market to stagnate and go backwards. Simply put, the rates are just too low and the appetite to get into the real estate market too high, and the stock levels of supply simply too low for the market to go into a very, very comatose state. If anything, we've had the boom. The new prices are set. They're here to stay. It's not going to get any cheaper anytime soon. Now we are just going to a more normalized state, a boom recovery. We're recovering from the boom, believe it or not, rather than heading towards some sort of stagnated place in the marketplace. Auction clearance rate still very high. Appetite in the market very, very strong. I'm getting text every 5 minutes about real estate. It is a hot topic for people right now. So that's where we are. That's the state of the market right now as I speak. But of course, markets can change, and that's why we have to monitor the economy every month, why the Reserve Bank of Australia meets every month to talk real estate. Hey, you have a great day wherever you are. I will catch you next time on Ask Sam.